Good evening, everyone. It's Money Professor, and I want to go into a more advanced strategy in the stock market. It's called option trading. I know everybody's been talking to me about it, and I never really gave them I never really said anything to them yet because I didn't know if anybody was actually ready for it yet that I talked to, but it's a very, very good strategy to get short-term aggressive gains very quickly and make a lot of money doing so. But it's also one of the most dangerous strategies to do. So basically, let me give it to you in general terms for what it is. And Robinhood has this strategy. You can actually do option trading on Robinhood. Basically, it's a strategy that consists of you buying a contract for a stock. And what a contract is you can buy, like say, you can buy one contract and it's worth 100 shares and it's really cheap. You could probably buy it for $100, but it may be an expensive stock. But it expires. The contract expires. So you don't have the 100 shares forever. You have them in a certain amount of time. So you literally can buy like 3,000 shares of something possibly for maybe $800, depending on what the situation is and what you're looking for. Now, with that being said, you have to pick a time frame of what you think the stock is going to do within this time frame of when you buy it. So basically what you're doing is you're leasing stocks for a certain amount of time, hoping that it will go up. And I'll give you an example. Say you pick a stock like Amazon, and you say, I think Amazon is going to go, it's currently at $2,000 right now. I think Amazon is going to go to $3,000, right? So you buy a contract and say, I want to buy 10 contracts of Amazon for $2,000, $3,000 or whatever, right? Now when you buy that 10 contracts, you have 1,000, I'm sorry, let me go back a little bit. For every one contract, you get 100 shares. So if you buy 10 shares, you get 1,000, you buy 10 contracts, you get 1,000 shares. So say with Amazon, you get 1,000 shares of that. You buy 10 contracts and you set a date for, it's called a call. A call is when you're expecting the stock to go up. And you say it's going to go to $3,000 by December 1st, right? Now, you're going to watch it fluctuate highly because obviously Amazon is a pretty volatile stock. But also with that being said, it's also an expensive stock too. So say by December 1st, it goes to $3,000. You have the potential, if you have 1,000 shares of it and you go and pull your money out of there, you have 1,000 shares of Amazon and it goes up $1,000. Now the contracts go up and are more expensive as the stock actually starts to go to the level of what you want it to go to. Like say Amazon is going to $2,200, $2,300, getting closer to that price that you said it was that you're making that call on. You're going to start to see a contract go higher and higher. And you're going to start to see a lot more money being made. Like I said, you're leasing the stock. But if it does not go to that price, you're going to start seeing that those contracts become worthless. They're going to start becoming worth less and less and less. So the drawback is that you have an expiration date on those shares. So like I said, with option trading, you can make a whole lot of money or you can lose a lot of money depending on what it is. But I think if you are a savvy investor, I think it is a good strategy to look at. If you're trying to make some type of short-term aggressive gain, you're trying to make $3,000, $4,000, you can definitely make that. So I think it is a very good strategy. And it's the opposite also. And with option trading, it works the opposite with what they call a put, you can actually bet on the stock market going down. But that will be another video, because I don't think I should mix that a call and a put, what they call, together. So we'll just start with option trading and what we call a call. You can look on Robinhood for option trading. They'll give you dates when you can make a trade, and what the expiration date is, and you can buy contracts, like I said. So I have done it a few times. And like I said, you can make some money, you can lose some money. But that's some information I wanted to give to you for a little bit more advanced trading on the stock market, and you can make a lot of money that way. So with that being said, thank you for the subscriptions, you guys, and keep subscribing to Money Professor, and I will have a lot of information for you guys. So with that being said, have a great night. And if you have any questions about option trading, don't hesitate to hit me up on my YouTube and talk to me, and I'll talk to you back about the information. And you can even email me too, and I can give you some personal information on that. JasonHWhitley@gmail.com. You guys have a great night.